Good morning, everybody. How's everybody doing today? James, you know what? I was just looking at the DAX recently with Counterpunch. I haven't looked at it in a long time. It's an old trade plan from when Counterpunch first came out, and I mean, it looks amazing to me. The second I looked at it, I'm like, oh, looks like it always has. I looked at some random day. It was one and done. It was like, wow, I have a client of many years way back. He goes all the way back to like when I first started in this business with NetPicks. A few years back, he sent me an email just saying how much he loves the trade plan with Counterpunch, with the DAX. He's hit his critical mass. He's completely retired, and he did it all with that trade plan. So it blew my mind. It was wonderful. And when I look at it today, I didn't look at it today, but last week I did. I think it's fine. You want to go through your own testing, of course, but that's what I would recommend. I don't know if you have Counterpunch. It would work great with Counterpunch Express also. Just might have to do some manual adjustments. But the trade plan is on the site. So, yeah, I think it would work great with that. Double check if the DAX is on there. I don't remember. If it's not, I'll dig it up and make it available. And that's just a model. I mean, you could use that same model, look for other start times. The DAX trades well throughout the day. So we're 2 minutes in front of our holiday adjusted crude oil inventory report. Starts at 11 today. Once the report comes out, we'll wait our 2 minutes. This is the Counterpunch chart on the right. This is a full Counterpunch trader, but the Counterpunch Express is basically the same. The only difference would be any key level adjustments you would need to do on your own with your brain. The Counterpunch Trader has that built in automatically. So it's a convenience tool, and it's debatable whether, you might be better off not even using it, because sometimes you can make those adjustments and you might decide in some cases not to. But that's a little more advanced. I'm not going to get into that at the moment, but you could trade this chart with Counterpunch Express too, I guess is the point. I do have add-ons turned on. You may want to turn yours on. On the left, of course, you've got Spotlight, the 5-tick momentum bar, and the 8-tick momentum bar on the bottom. So a few different things. I really don't pay much attention to Spotlight in this case. I figure if you're trading Spotlight, you know what you're doing. I'm just so used to Counterpunch after all these years. I just stick with it with this report, although I do believe Spotlight is probably more productive. I haven't compared it in a while, but every time I have, Spotlight, I believe, is a bit more productive with this than Counterpunch. Look at that. We got a real reaction. When was the last time we saw that? That's interesting. So the report just came out, and it's been weeks since we've seen a reaction like this. Maybe months. It all blends. But it's been a while. A little bit of range in this reaction. I'm not sure if this is the bottom of the reaction yet. Seems like it might be. Let's just kind of mark the range just so we can get a sense of where this price ends up. We got about another 50 seconds to go, and there's no setup yet for us, so we'll just wait. Welcome, Michael B. I just saw your message. Michael, I'm not sure what strategy you have, if any, but if you have any questions, type them in, and I'll answer it as best I can, but I'll be focusing on the trading primarily as a top priority first. All right, so in 15 seconds, we'll start looking for a setup. And there it is, actually, and it's right below the range. It will be at 54, and that's going to be targeting 36, and that trade is now valid. And it may cancel. The stop is at 73. If this bar closes above our signal line, the short trade will cancel. Again, targeting 36.
Order filled.
And it did trigger in. So that's the first trade of the morning, breaking the reaction, the low of the reaction that I marked. Now we need follow through. Money management will be at target 1. If it gets to 43, we'll be able to move our stop. I'm going to adjust this stop up to 76, by the way. I know it's a big adjustment, 3 ticks, but I want to get it above the 200 and the 75-cent level. So I'm willing to pay a few extra ticks on the stop. So the stop I moved, instead of 73, I put it at 76. There was a get in sync short on the 5-tick Spotlight, and it looks like the 8-tick got into a blue trade, and both those trades have hit. Well, the blue trade hit its target 1, On the 5-tick chart above, that yellow trade, it's 1 tick shy. There it is, hitting money management. So you can move to break even, and Spotlight has done its job already, and Counterpunch is still trying. So we got to get to this line right there, and then we can at least get to break even. Let's see if we can get there. 1 tick shy. All right, there it is. So we're going to move our stop now and get into a risk-free position, and hopefully that will hold. So stops move to 53, and we need to see a push lower here. Sure would be nice to be one and done. So that 50-cent level could be a nice key level for us. Let's see if the price could stay below it. See how that 50-cent level is held so far? It's not done testing it though. We're trying to get above it. Looks like we're going to stop out here if it doesn't hold.
Order filled.
Yeah, we're done. That's too bad. All right, so break-even trade on our first attempt, and Spotlight hit its target objective. So you know, I usually do Counterpunch because it finishes faster, but today that wasn't the case. Spotlight outperformed Counterpunch on both charts, hitting its target 2 on the top faster chart. Targets 1 and 2, both are profit targets on the slower 8-tick chart below. There's a long now, heads up. That is at 61, targeting 80. That's a 19-tick trade. It's not that small. And that stop would be at 39. It may cancel. Let's see what happens if we get 2 closes below the line. 2 closes below that cyan line cancels the setup. It was like a self-fulfilling prophecy when I was talking a moment ago about how Spotlight is probably better than Counterpunch, and then it totally outperforms and hits its goals, and we're still trying to get our winner with Counterpunch. And that's the reason I stay with Counterpunch, is because Counterpunch usually finishes sooner, not always. So if this bar closes below that cyan line, we will cancel the setup and wait for the next. This market has kind of slowed down a bit after that initial reaction to the report. And we're still trading below the initial reaction. This line here was the low end of that range, and the price is still testing that low end of the range. So support becomes resistance, right? The long trade canceled, everyone. You can see how the little plus sign stopped printing. 2 closes below the line. Cancel the long trade. And another long trade also at 61. So let's see if the price wants to trade back up into its range. This is a smaller trade, targeting 75, and the stop's at 43. I like the white trade better, but...
Order filled.
All right, so that trade did trigger in. Money management on this trade will be at the 200 moving average, the magenta line. We got to get to 71. So we got to get to target 1, but also go 10 ticks before we can get to break even. And we don't know if this price wants to test that move down. I like to mark the range of the initial reaction. Oftentimes the price will just trade right back up into it, and that's what we want. The chop filter just appeared. This green dot indicates that the price is entering into what is known as a Bollinger Band squeeze, where the price is compressed, builds at pressure. If there was a setup, a long setup, once this chop filter shows up, because we're below the 50 moving average, we may not get a long setup. It would get filtered out, but the long trade happened before the filter came on. But at times that filter would keep you out, because when we get into the chop zone where these dots start showing up on our histogram, if we're below our 50 moving average, we're typically not going to trade long. Or if we're above the 50 moving average, we're not going to trade short. The only exception would be if the targets are also on the same side. So there are a little bit of some nuance, but what we need here now is to get through these moving averages. The histogram is showing us the fast trend on a chart 5 times higher. So take a 377 tick, multiply it by 5, slows it down 5 times. This is showing us what the fast trend is. And there's money management, guys, and we just missed full target. Move your stop to break even. This will be our power of quitting trade. We need 1 more tick, and there it is. It's hit the full target. I didn't get filled. Definitely don't want to let this get away from us.
Order rejected. Order filled.
I pushed my stop up and got filled, so I'm not going to fight over a tick or two. The full target was hit. I wasn't filled. I'm not going to let it come all the way back down. If you guys are still in that trade, a partial profit is better than giving it all back. But that does it, guys. I mean, if you're still trailing, okay, could still go higher, could still go to target 3. An advanced technique would be to segue over to the new setup. A lot of traders will take what's going on in this trade and then move their targets up and try to go for these bigger targets. That's not something that's really part of this plan, but with Counterpunch, you do have a lot of flexibility, and there are different styles of trading, but I know traders that do that and do quite well. From my point of view, full target reach, target 2 is our objective. Look how perfectly it hit it. Too perfect. We needed it to go one tick further. I ended up getting out, I think, right in there, a couple ticks lower. Look at the price coming off now. Trading isn't perfect. Sometimes these targets are too perfect. You want it to trade through, right? Sometimes that doesn't happen. Look at that. This could still come up again. I mean, if you have an additional position, you're protected at break even. You could get another leg higher. There it is. So that's full target if anyone was hanging on. And if you're trading additional positions, this could be the start of something good. We'll have to find out. I usually go to targets 2 and 3. The way the crude oil session has been lately, I don't think that the trailer has been very productive over time. There just hasn't been a lot of movement. But every now and then, you never know. Could get a nice runner. Bound to happen sooner or later. The stops are going to move to 64 once this bar closes. Hey, James, good. Thanks for joining us. I understand it's tough on your side of the world. The DAX could be perfect for you. Just realize that it's a bigger trade. There's more risk. You want to make sure you're adequately funded. Stick to that 2%. But the DAX is, I mean, it makes me want to move to that side of the world to trade the DAX because it's probably, I mean, that talk about greatest hits. That's definitely one of my greatest hits. Yeah, and check the volume on that. I have no idea if the mini DAX is even worth it. And that's not going to be the same. You're going to have to go through your own testing. Definitely do your fast testing. Make sure you can quit positive most of the time. And then dedicate time to the UTA spreadsheet as well. Yeah, do it right. You know, you got a chance to do it right. Follow the example of my client Mark, who I told you about earlier. I mean, the guy hit his critical mass. He's retired due to that plan. It's made him wealthy. He sits on his veranda on the French Riviera drinking his Bordeaux, watching all the attractive people walk by. What a life. Good night, James. Thanks for joining us. Okay, everyone, if you're in this trade, if this green bar closes above this line, the stop is going to move. It's going to move to 68, but I would say move it to 67. Let's see. We got a little time left on here. Don't move it too soon. 67 will put it one tick below right here. Let it close above the line first. All right, there it is. And it did move to 67. I believe that's another, is that another filter that's in there? I don't know. Yeah, the trailer bar adjustment. Yeah, so pretty smart. The Counterpunch Trader has some pretty cool tools in there. There's target 3, yay! Again, a perfect target. No, it went through. I know I got filled. Make sure you're filled. You should be. Targets 2, targets 3, target 2, target 3, and now anyone trailing? This trailer should move to 72. Heads up. All right, look at that. Notice how it's moving right up into the middle of, let's take a look, right to the middle of the reaction. That's why I put these lines here. Pretty interesting, isn't it? It broke through the lows of the reaction, couldn't follow through, and has set up a nice move back up. And now it's right in the middle. And the stop, it looks like it's moving, but I wouldn't move it. I would leave it. I'm going to work around the low spike on this red bar here. I'm going to keep it at 72 for now. One tick. I'm willing to give that up to try to stay in a trade for a bigger move. This might push the stop up to 74, and that, you know, that's 2 ticks. So you'll have to decide if you want those 2 ticks or if you'd rather give it up and see if you could stay in for a bigger move. Let's see what happens here. Yeah, 74 now is the stop. I'm okay with 74. You got the 75 key level number as a little bit of protection. So I would go from 72 to 74. This market's going higher. Let it go higher. Notice that it got right to the halfway point of the reaction before before it started to head down again. And look at the 75. There it is. Just stopped us out, 74. And that's a wrap, everybody.